Right, guys, this is part two of this financial statements example when we're looking at drawing up the balance sheet. The very next note, guys, is note number 3, which is fixed assets. So if we just have a look again, gents, what makes up those fixed assets? We know it's land and buildings, vehicles and equipment, okay? And you can see how things like accumulated depreciation is also going to have an impact on that, right? The other thing that's worthy of noting just quickly, guys, is vehicles. They tell us that 400,000 Rand was purchased during the year, and this has been recorded. So you'll see now when we actually calculate that vehicles portion of the fixed asset note, you'll see what we do with that 400,000 Rand, but I'll touch on it again shortly. Okay, just to start off with, guys, that first note, the first note under fixed assets is land and buildings. And you know, obviously, the historical cost rule, we always record land and buildings at the original purchase price. So you see there, land and buildings is 968,000 Rand. Okay, if we take that through to the actual fixed asset note, you'll see that the carrying value at the beginning of the year is 968,000 Rand because of the historical cost rule. There's no accumulated depreciation on land and buildings, obviously, and there hasn't been any movements, so there hasn't been any additional land and buildings purchased during the year, otherwise we would have included it. Okay, and then you can see the carrying value at the end of the year for land and buildings is going to be the same, 968,000 Rand. Okay, so that's just simply transferring it from there. Okay, we're now going to look at vehicles, guys. So you can see vehicles, the figures that we're going to be looking at. You'll see vehicles balance at the end of the year is 720,000 Rand. Okay, during the year we purchased 400,000 Rand. Okay, and then you can see obviously that the cumulative depreciation at the beginning of the year was 90,000 Rand, and the depreciation adjustment that we've made for this year is 32,500 Rand. So you'll see now, gents, how we actually draw up the vehicles component of the fixed asset note and how those figures are all important to us. Okay, the first step, gents, is we look at the carrying value at the beginning of the year and how we calculate that carrying value at the beginning of the year, guys. You'll see the first thing we need to do is we take the end of year balance of 720,000. We've got to take away this additional purchase of the vehicle of 400,000. So we know the original carrying value of the vehicle was 320,000 Rand. So that is the balance for vehicles at the beginning of the year. To calculate its carrying value, you would have to deduct the 90,000 Rand, the accumulated depreciation from the 320,000 Rand to actually get the carrying value. So if you have a look quickly, I'll just show you in the actual note itself. The cost at the beginning of the year of vehicles was 320,000, right? That accumulated depreciation at the beginning of the year was 90,000 Rand, which was given to us. So to calculate the carrying value of that vehicle at the beginning of the year, it's going to be 230,000 Rand, right? We're then going to look at movements during the year. Okay, so these movements include the additional vehicle that's been purchased, and obviously it includes that adjustment for depreciation for that particular year. Remember, gents, in this section, in this example question that we've been working through, these adjustments that we've given them to you, so we're not needing to calculate them as well, but you'll see as we go into next week, we're going to be calculating them too. So if we look at those movements, the 400,000 Rand additional vehicle and that 32,500 Rand depreciation, this is how we would record it. So additions at cost, 400,000 Rand, the depreciation, 32,500 Rand. Notice that depreciation is in brackets, okay? And then you'll see we simply deduct the 32,500 Rand from the 400,000 and we get the total movements for the year amounting to 367,500 Rand. Right. Then finally, guys, you can see the carrying value at the end of the year, how you would calculate that. We know that the vehicle cost is 720,000, including the new vehicle. And then if we deduct the total amount of accumulated depreciation of 122,500 Rand, you'll see how we get that final figure of the carrying value at the end of the year. So there's our cost at the end of the year, all the accumulated depreciation deducted from that cost at the end of the year. And then you can see that the carrying value at the end of the year amounts to that figure of 597,500 Rand. Okay. What you can see here, guys, if we work from the bottom, okay, if we take 720,000 minus 122,500, we get the carrying value at the end of the year. If you work from the top coming down, you also get the same figure. So if you go 230,000 plus the 367,500, you also get the carrying value at the end of the year of 597,500 Rand. Okay, so that is the vehicles component of the fixed asset note. If we now move on to equipment, first step, calculate the value at the beginning of the year. We know what the equipment amount was, what it was, and we know what the accumulated depreciation amount was. So if we just simply put that information in, like we did with vehicles, you end up with a carrying value of equipment at the beginning of the year of 74,000 Rand. If we then have a look at movements during the year, there was no additional equipment purchased, but you can see we need to do that adjustment for depreciation, which was 20,700 Rand. So we include that in the movements, and obviously the total of movements would be a negative figure, so it's in brackets, 20,700 Rand. Again, calculating the carrying value at the end of the year. What was the balance at the end of the year for equipment? It was still 207,000. And what was the total accumulated depreciation? It was that figure there of 153,700 Rand. So you can see we add that information in there. We subtract the 153,700 from that 207,000, and you end up with the carrying value at the end of the year of 53,300. Again, gents, just to show you again to illustrate, if you took 74,000, you subtracted the movements minus 20,700, you'll see you'll also get the same figure of the carrying value at the end of the year. So it works upwards and it works downwards. Okay, so the both figures and calculations meet with the same calculation there, with the same answer for the carrying value at the end of the year. All right, then gents, what we do is we just total up each row. Each row gets totaled, okay, and then you'll see the figure that's important to us is that final amount here of 1.6 million 18,800, okay, and that's the figure that we need to use, which we transfer straight to the balance sheet section, and we show that as note number 3, and we show that figure there. All right, so that's the fixed assets tangible note. All right, we're now going to look at financial assets. So you'll see here what is the financial asset here. Remember, the fixed deposit at Uni Bank was an amount of 80,000 Rand, but then during the year, they told us that 30,000 Rand of it has actually matured. So if we have a look, you'll see we actually have to deduct the 30,000 from the 80,000, and we end up with only 50,000 Rand there. And then we obviously just transfer that figure into our financial assets amount there. The fixed deposit now amounting to only 50,000 Rand that's on fixed deposit. Same thing, we add those two figures up because they're in a block. We end up with the final amount of non-current assets, okay? And then you'll see we can move on now to the actual current assets section. And those current assets are made up of trading stock, debtors control, bank, cash flow, income receivable or accrued, expenses prepaid, and consumable stores on hand. Okay. Again, gents, those current assets, what we've done to keep things simple, we've actually categorized them and broken them up into extra categories. So the first part is inventory, and inventory is made up of trading stock and consumable stores on hand. And the way we transfer that information into our inventory note would be as follows. Same thing, we add the two figures up, the 160,000 plus the 1,050, and we end up with a total there of 161,050 Rand. That we transfer straight across to inventory as note number 4 in the balance sheet. Okay, we can then move on to the trade and other receivables. That's made up of debtors control, income receivable or accrued, and the expenses prepaid. Again, transfer that information from the balance sheet straight into the actual note, trade and other receivables. Okay, we then can total them, and you end up with a total for trade and other receivables of 71,550, and same thing, we transfer that to the balance sheet. Okay, again, looking at that post-adjustment trial balance, the cash and cash equivalents, you'll see there it involves bank and cash float, and then there was also 30,000 Rand fixed deposit amount that matured, so that also needs to be taken through to your cash and cash equivalents note number 6. Okay, what I have also noted for you guys here is petty cash. If there was a petty cash amount here, you'd have included it as well under your cash and cash equivalents, and that's 64,100 Rand. And you'll see that's what you would do with that amount. You transfer it straight to that actual balance sheet. Same thing, they're in a block. That means we add them all up and we put a total above the block. So we add up inventory, trade and other receivables, cash and cash equivalents, and you end up with a total amount there of current assets of 296,700. Okay. Then finally, gents, you work out your total assets figure. We just add the non-current assets to the current assets, and we're ending up with our total assets amount. Right. We can now move on and have a look at the owner's equity note. Remember, this is quite an important note, working out owner's equity, because it's a little bit different to one of the previous videos that I shared with you earlier on that little quick introduction to financial statements. Okay, so if we look at the owner's equity note, guys, what's important here? It includes things, obviously capital. We know additional capital was introduced in the year. We know that there's drawings. We know that there's obviously a net profit. So you'll see now how we'd actually format that and how we get to that final calculation for this equity. All right. So just to start off with, you need to calculate what is the balance at the beginning of the year, right? The balance at the beginning of the year is obviously the end balance was 1.4 million. You had to deduct the additional contribution of 400,000 to get the balance at the beginning of the year of R1 million. Okay. Then our net profit for the year, okay, from the income statement. That's what I mentioned in part 1 video, that 144,300 Rand is important to us, because that's the total figure that you're actually going to post to owner's equity as net profit for the year. All right. Obviously, if there's a loss, you would then show that figure in brackets. Additional capital contributions. Remember that additional information told us that it was 400,000 Rand, and that's why we've included that under our owner's equity note as additional capital contributions, right? And then our drawings figure, which includes that adjusted amount there for drawings, amounts to 244,500 Rand. Note how we've placed that in brackets, because we have to deduct that from all these things, from all the owner's equity, because his owner's equity has been reduced by the money that he takes out of the business. Okay. We then have the balance at the end of the year of the 1.2,999,800 Rand. Okay. And then we transfer that figure across. Sorry, I said that wrong, incorrectly there. Okay, 1,299,800 Rand gets transferred, obviously, to owner's equity. Okay, let's move on. All right, then we look at the next one, Jen, sorry, the loan from Uni Bank here. So we see that amount there was 600,000 Rand, okay? And obviously we have to deduct the amount there of 100,000 Rand from it, okay? Because it had in the previous information there, if you saw that amount of 100,000 Rand was due on the 30th of June. So we actually had to remove that 100,000 from the initial loan amount of 600,000. So we now end up with a new figure of 500,000 Rand. Same thing, there's nothing else in that block. So we just put the total amount above it, 500,000. Okay, moving on, gents, to our next note, which is trade and other payables. We can see what makes up trade and other payables, right? What has happened here is which is worth noting, is the short-term portion of the loan. So this 100,000 Rand needs to be included because it now becomes a short-term portion of the loan because it was due, all right? And you'll see we include that portion of that short-term loan with that trade and other payables note, okay? And then we add the figures together and we get our final amount for trade and other payables. Again, gents, just noting and by highlighting it in red here, other items that would be included in trade and other payables have all been included there for you. So creditors for salaries, pension fund, SARS, and UIF would be other figures that you would normally place under trade and other payables. Okay, you then took that total across. Same thing, nothing else in that block. So you add it up, put the total above. Okay, and then you can see finally in our final step, what we've done is we've added up owner's equity, we've added up non-current liabilities, we've added up current liabilities, and then you get to the same total equity and liabilities figure, 1,965,500 Rand. Okay, those two figures need to be equal because remember the counting equation, assets is equal to owner's equity plus liabilities, and you can see our total assets figure is equal to our total equity and liabilities. Then we know we've obviously done the question correctly. Right, gents, thank you.